Since 1980, college tuition in the United States has increased by over 100%. In the same period, median wages for young workers rose by roughly 67%. You were told education was the best investment in your future. The math says otherwise. That gap between what education costs and what it returns is where the trap lives. They told you, go to college, get a degree. It's your ticket to the middle class. It's the best investment you'll ever make in yourself. It sounded smart, responsible, like the obvious path forward, like what responsible adults do, what your parents did, what everyone who made it did. But somewhere between your first tuition payment and your 10th year of monthly bills that barely touch the principal, somewhere between the degree on your wall and the balance that never seems to go down, that dream started feeling less like opportunity and more like a subscription service you can't cancel. If that line hits close to home, if you've been paying for 5 years or 10 years or longer and the balance still looks almost the same as when you started, drop a comment with how long you've been paying and how much your balance has actually decreased. Because almost everyone watching this has the same story, the same confusion, the same feeling that they did everything right and somehow ended up trapped anyway. This is the story of how higher education in America became a $1.7 trillion industry built on debt. How a social promise turned into a profit center. How the credential you needed to get ahead became the anchor that holds you back. And how the system was designed, step by step, policy by policy, to work exactly this way. This is educational content, not financial, legal, or student loan advice. Loan types, repayment options, and forgiveness programs vary significantly by lender, servicer, and individual circumstances. Always verify your specific situation with your loan servicer or a qualified advisor before making decisions. The average college graduate in 2024 leaves school owing roughly $37,000. That's the average. Many owe $50,000, $70,000, $100,000, or more. Doctors routinely graduate with $200,000 to $400,000 in debt. Lawyers with $150,000 to $250,000. Teachers, nurses, social workers, people who went into fields specifically to help others, often owe $50,000 to $80,000 for degrees that lead to jobs paying $40,000 to $55,000 a year. These aren't people who made irresponsible choices. These aren't people who partied through school or majored in underwater basket weaving or failed to take education seriously. These are people who did exactly what they were told to do, who followed the advice of parents, teachers, counselors, and society, who believed the promise that education was the path to stability and prosperity. And now, they're paying for that belief. Literally, every month, for 10 years, 20 years, sometimes 30 years or more. Because here's what they didn't tell you when you were 17 or 18 signing those promissory notes, often with a parent co-signing beside you, often without fully understanding what you were agreeing to. They didn't sell you education. They sold you debt. Debt that would follow you for decades. Debt that can't be discharged in bankruptcy. Debt that grows even when you can't afford to pay it. Debt that becomes more profitable the longer you carry it. Because when you take a student loan, you're not just borrowing money to pay for classes and books and housing, you're buying time in a system that profits from keeping you there. From keeping you paying. From keeping you trapped between the degree you need to earn a living and the debt that eats your earnings before you even see them. Let's go back to understand how we got here. Because this system, the one where young people routinely start their adult lives $50,000 or $100,000 in debt before they've ever earned a real paycheck, wasn't always normal. It's not how it worked for previous generations. It's not an inevitable feature of higher education. In the 1960s and 70s, you could work a part-time job during the summer and part-time during the school year and pay for most or all of your tuition at a public university. Not just cover living expenses, actually pay tuition. The cost of a year at a 4-year public university was roughly equivalent to working full-time at minimum wage for a few months. It was affordable, accessible. You graduated with little or no debt. That wasn't because students worked harder or were more responsible. It was because tuition was priced for students, not for profit. Because states funded higher education as a public good. Because universities operated on smaller budgets with fewer administrators and less expensive facilities. Then came the shift. Starting in the 1980s and accelerating dramatically from the 1990s forward, state funding for public universities began declining as a percentage of school budgets. States faced budget pressures and chose to cut higher education funding. Universities had to make up the difference somehow. So they raised tuition. Significantly. Year after year after year. And they could do it because they knew students would pay. Not because students had more money, but because students had access to loans. Federal student loans that were guaranteed by the government. Private student loans that banks were eager to provide because they were almost impossible to discharge in bankruptcy. The availability of easy credit didn't make education more accessible. It made education more expensive. Because when students can borrow unlimited amounts, when loans are guaranteed regardless of ability to repay, when default risk is minimal for lenders, there's no market pressure to keep prices down. There's no constraint. Universities could raise prices as much as they wanted, knowing that students would borrow whatever they needed to pay. And they did. They raised tuition far faster than inflation, far faster than wage growth, far faster than any other sector of the economy. Between 1980 and 2024, tuition at public 4-year universities increased by over 1,100%. Private universities saw similar or greater increases. In the same period, the Consumer Price Index, general inflation, rose by about 270%. Median wages for young workers rose by roughly 67% in real terms. That's not a sustainable ratio. That's not education becoming more valuable. That's education becoming exponentially more expensive while providing roughly the same product. A bachelor's degree that used to cost a summer's work and now costs a decade of monthly payments. Sound familiar? So why did tuition explode? What changed? What are you actually paying for that costs 12 times more than it did 40 years ago? You're not getting 12 times more education. Class sizes didn't shrink by 12 times. Professors aren't paid 12 times more. In fact, the majority of teaching is now done by adjunct faculty making poverty wages. The quality of education, by most measures, hasn't increased proportionally. What increased was administration, bureaucracy, amenities, marketing, competition for students based not on academic quality, but on campus facilities that look like resorts. The number of non-teaching administrators at universities exploded. Entire departments dedicated to student services, diversity initiatives, campus life, recreational facilities, mental health, career services, all valuable things. All things that cost money. All things that previous generations somehow managed without. Dormitories turned into luxury apartments. Dining halls became food courts with dozens of options. Gyms became recreational complexes with rock-climbing walls and lazy rivers. Campuses competed to attract students with amenities that had nothing to do with learning. And all of it, every administrator hired, every building constructed, every amenity added, was paid for by tuition, by students, by loans that students would spend decades repaying. Universities became businesses competing for customers. And when your customers can borrow unlimited amounts, when they're 18 years old, making life-altering financial decisions without fully understanding the long-term consequences, when society tells them they have no choice but to attend, you can charge whatever you want. The credential became expensive not because it became more valuable, but because the market allowed it. But here's where the trap really locks in. Here's where the student loan system reveals itself as something more than just expensive education. This is where it becomes a mechanism of control that shapes your life for decades. Student loans, especially federal student loans, are unique in American debt. They're special, and not in a good way. They can't be discharged in bankruptcy except in cases of extreme, provable, permanent hardship that's almost impossible to meet. You can declare bankruptcy and discharge credit card debt, medical debt, even mortgage debt. But student loans? They follow you forever, unless you pay them off or qualify for very specific forgiveness programs that have strict requirements. If you default, the government can garnish your wages without a court order. They can take your tax refunds. They can take part of your Social Security when you retire. They have collection powers that exceed almost any other creditor. The interest compounds and capitalizes. If you can't make payments during school or during forbearance or deferment, the interest that accrues gets added to your principal. So you end up owing more than you borrowed, even if you never missed a payment. You can pay faithfully for years and watch your balance stay the same, or even grow, because most of your payment goes to interest. The loans are tied to your credit score. Default affects your ability to rent an apartment, buy a car, get a mortgage, sometimes even get a job. Your financial mistake at 18 follows you through your 20s and 30s and beyond. This isn't normal debt. This is debt designed to be inescapable. Debt that's more like indentured servitude than a typical financial transaction. You borrowed money for education, but what you bought was decades of financial obligation that constrains every other choice you make. Can't take a lower-paying job you're passionate about because you need the salary to make loan payments. Can't take time off to travel or start a business or have kids or care for aging parents because you can't afford to miss payments. Can't save for a house because student loan payments take too much of your income. Can't save for retirement because loans come first. The debt doesn't just cost you money, it costs you options, freedom, the ability to make choices based on what you want rather than what you owe. That's the trap. Not just the amount, the structure, the way it's designed to follow you and constrain you and extract from you for as long as possible. Comment if you've ever had to turn down a job or opportunity because you needed the higher salary to make loan payments. And here's what makes it even more insidious. The people who created this system, who benefit from this system, who profit from this system, they don't carry this burden. University administrators who raise tuition don't carry student debt. Legislators who made student loans non-dischargeable in bankruptcy often graduated when college was affordable. Loan servicers who collect payments and charge fees profit from your debt but don't carry it themselves. The baby boomer generation, the one that often tells younger generations to just work hard and pay your loans like we did, graduated with average debt loads of $1,000 to $3,000 in 1970s dollars. That's roughly $7,000 to $20,000 in today's dollars. And wages were proportionally higher. And housing was cheaper. And they could discharge student loans in bankruptcy if things went bad. They're giving advice based on an economic reality that no longer exists. They worked their way through college because college cost a fraction of what it costs now relative to wages. They paid off small loans quickly because they could. They built wealth young because they weren't starting $50,000 or $100,000 in the hole. You're playing a different game with different rules and being told you're failing because you're not winning the way they did. But they didn't play this game. They played an easier one. One where the math actually worked. The people making policy decisions about student loans, the people running universities, the people profiting from the system, they're insulated from the consequences. They don't feel what you feel every month when that payment comes due. They don't live with the stress of watching the balance barely move despite years of payments. They don't face the choices you face between paying loans and saving for the future. They built a system that extracts from you and benefits them, and then they blame you for struggling within it. Let's talk about the psychological weight of student debt. Because it's not just financial, it's emotional, mental. It shapes how you see yourself and your future. Student debt creates a particular kind of shame because you chose it. You signed the papers. Nobody forced you. So when you struggle to pay it, when you feel trapped by it, when you regret it, there's a voice that says it's your fault. You should have known better. You should have worked harder. You should have chosen a more lucrative major. You should have gone to a cheaper school. But you were 17 or 18 years old. You were told by every trusted adult in your life that this was the right choice, the necessary choice, the only path to a decent future. You were told college graduates earn $1 million more over their lifetime without anyone explaining that after loan payments and interest, after the opportunity cost of 4 years not earning, after the constrained choices for decades, that number doesn't mean what it sounds like. You made the best decision you could with the information you had and the pressure you were under. That's not irresponsibility. That's being a teenager in a system designed to push you into debt before you're old enough to fully understand what you're agreeing to. And the shame keeps you silent. You don't talk about your debt with friends or family because everyone's supposed to be fine. Everyone graduated and got jobs and figured it out, except they didn't. They're struggling too. They're making the same payments. They're feeling the same stress. But nobody talks about it because everyone's ashamed. That silence is profitable. Because when you're isolated in your struggle, when you think it's just you, when you blame yourself, you don't organize, you don't demand change, you don't fight back, you just keep paying, keep suffering, keep blaming yourself for a systemic problem. Student debt doesn't just take your money, it takes your confidence, your sense of possibility, your ability to take risks or make choices based on what you want rather than what you owe. It makes you risk-averse. You can't start a business because you need the steady paycheck. You can't switch careers because you need the salary. You can't move for a better opportunity if it means a pay cut. You stay stuck because the debt won't let you move. That's not just financial pressure. That's control. That's a system that profits from keeping you predictable, stable, employed in jobs that generate income you'll use to pay loans rather than build wealth. Did your student loans force you to take a job you didn't want or stay in a situation you wanted to leave? Comment yes or no. So let's talk about what actually happens when you take out student loans. The mechanics of how this trap works in practice. Because understanding the system is the first step to navigating it. You borrow, let's say, $40,000 over 4 years for a bachelor's degree. That's below the current average. You graduate and enter a 6-month grace period before payments start. During that grace period, interest accrues. Let's say your loans have an average interest rate of 5%, pretty standard for federal loans, sometimes higher for private. Over 6 months, at 5% annual interest, you accrue roughly $1,000 in interest. That $1,000 gets capitalized, added to your principal, when repayment begins. So now you owe $41,000, not $40,000, before you've made a single payment. You enter standard 10-year repayment. Your monthly payment is roughly $424. Over 10 years, you'll pay about $50,900 total. That's $10,900 in interest on a $40,000 loan. But here's the thing. Most people can't afford $424 a month right out of college while also paying rent, utilities, food, transportation, and trying to live. So they defer. Or they switch to income-driven repayment plans that lower the monthly payment but extend the term to 20 or 25 years. Lower monthly payment sounds good. More manageable. But over 20 years at income-driven repayment, you might pay $80,000 or $90,000 total on that same $40,000 loan. Double what you borrowed. And if your income stays relatively low, you might qualify for forgiveness after 20 or 25 years. But any forgiven amount may be taxed as income, creating a massive tax bill you're unprepared for. Meanwhile, during any periods of deferment or forbearance, when you can't afford payments, when you're unemployed, when life happens, Interest keeps accruing. And when you resume payments, that interest capitalizes. Your balance grows even though you borrowed a fixed amount. So you pay and pay and pay. You make your monthly payment faithfully for 5 years. You look at your balance expecting it to have dropped significantly. And it's barely changed, because most of your payment went to interest. The principal barely moved. That's not because you did anything wrong. That's how the math works when you have high interest rates and long repayment terms and capitalization. That's the system functioning exactly as designed. It's designed to extract maximum value over maximum time, to keep you paying for as long as possible, to make the loan as profitable as possible for the lender and the servicer and everyone involved except you. Now let's talk about who actually benefits from this system. Because it's not students. It's not even really universities, though they benefit indirectly. The real winners are less visible but more powerful. Loan servicers make money from servicing your loans. They get paid to collect your payments, manage your account, process your paperwork. The more loans they service and the longer those loans last, the more they make. They have no incentive for you to pay off quickly. They have no incentive to help you find the best repayment plan or the fastest path to being debt-free. Private lenders make money from interest. The longer you pay, the more interest accrues, the more profitable your loan is. They profit from complexity, from confusion, from borrowers not understanding their options or their rights. The federal government makes money from student loans. Yes, the government. Federal student loans are profitable. The government borrows money at very low rates and lends it to students at higher rates. The interest spread is profit. Default rates are factored in. And the government has collection powers that private creditors could never dream of. Politicians benefit from student loans as a policy tool. They can point to increased access to education. They can claim they're helping students. They don't have to raise taxes to fund higher education directly because students borrow instead. The cost is pushed onto individuals and into the future, making it politically invisible in the present. Universities benefit indirectly. They get paid up front whether students can afford it or not, because loans are readily available. They face no consequence if students graduate with crushing debt and can't find jobs. Their incentive is to maximize enrollment and maximize tuition, not to keep costs down or ensure good outcomes. Employers benefit from credential inflation. When everyone has a bachelor's degree because everyone's told they need one, employers can require degrees for jobs that didn't used to need them. They get a more educated workforce without paying for that education. They shift the cost onto workers who pay for credentials through debt. Everyone benefits except the student. The student carries the debt, pays the interest, lives with the consequences, and absorbs all the risk. If the degree doesn't lead to a good job, if the field doesn't pay well, if the economy tanks, if life happens, the student still owes. The loan doesn't go away. The debt doesn't forgive itself. That's not a broken system. That's a system working exactly as intended for everyone except the people it claims to serve. Let's talk about the lies you were told, the specific pieces of misleading information or outright deception that pushed you into this situation, because recognizing them helps you stop blaming yourself. College graduates earn $1 million more over their lifetime. That statistic is technically true on average, but deeply misleading. It doesn't account for loan payments. It doesn't account for interest. It doesn't account for opportunity cost, the income you didn't earn during 4 years of school. It doesn't account for the fact that averages include extremely high earners and people who graduated debt-free. It doesn't tell you that after you subtract debt payments, the gap narrows significantly or disappears entirely for many people. Student loans are good debt. The idea that some debt is good because it's an investment in yourself. But investment implies reasonable expectation of return. If you borrow $100,000 to earn a degree that leads to a $45,000 job, that's not good debt. That's a bad investment that you can't escape from. You'll get a good job and pay it off quickly, Except good jobs aren't guaranteed. The job market is competitive. Starting salaries are often lower than projections. And even with a decent job, rent, living expenses, and loan payments consume most of your income. Quickly turns into a decade or two or more. Follow your passion. The advice to study what you love without considering earning potential. Beautiful advice if you can afford it. Dangerous advice if it means borrowing $80,000 to enter a field that pays $35,000. Passion doesn't pay loans. Income does. Everyone has student loans. This normalizes debt as inevitable and acceptable. It makes you think you're supposed to have loans, that it's just part of being a college graduate. It removes the stigma that might make you question whether you should borrow so much. It makes the trap feel like a rite of passage instead of a policy failure. All of these messages pushed you into debt, made it seem reasonable, necessary, safe. And now you're living with consequences they conveniently didn't mention. How many of these lies did you believe when you took out your loans? Comment which one hit hardest. Now here's the part where we talk about what you can actually do. Not magic solutions, not get-rich-quick schemes, not debt relief scams that charge you fees to do things you could do yourself for free. Real information about how the system works and how to navigate it when you're already in it. This is information, not advice. Every situation is different. Loan types, servicers, repayment options, and forgiveness programs vary. Always verify your specific situation with your loan servicer or a qualified professional before making decisions. First, know exactly what you have. Federal loans or private loans or both. What's the interest rate on each? Who's your servicer? What's your current repayment plan? Log into your account and write it all down. You can't make good decisions without accurate information. Federal loans and private loans are completely different. Federal loans have protections, options, and programs that private loans don't. If you have both, your strategy for each will be different. Second, if you have federal loans, understand your repayment options. Standard 10-year repayment, graduated repayment, extended repayment, income-driven repayment plans like IBR, PAYE, Repay A, ICR. Each has different requirements, different monthly payments, different total costs over time. Income-driven plans lower your monthly payment based on your income and family size. The payment can be as low as zero if your income is low enough. But the loan still accrues interest, and the repayment term extends to 20 or 25 years, meaning you pay more total interest over time. Some people need income-driven plans to survive financially. That's fine. That's what they're there for. Just understand the trade-off. Lower monthly payment now means more total cost and longer time in debt. Third, understand how interest works and when it capitalizes. Interest accrues daily based on your principal balance and your interest rate. If you're not making payments during school, during grace periods, during deferment or forbearance, that interest still accrues. When you resume payments, unpaid interest often capitalizes, getting added to your principal, which means you're now paying interest on interest. If you can afford to pay even just the interest while in school or during non-payment periods, you prevent capitalization. Even small payments, $20, $50, $100 a month, can save you thousands over the life of the loan by preventing interest from turning into principal. Fourth, prioritize high-interest debt. If you have multiple loans at different interest rates, mathematically the fastest way to reduce total interest paid is to pay minimums on everything and put any extra money toward the highest interest loan first. Once that's paid off, move to the next highest, and so on. This is called the avalanche method. Some people prefer the snowball method, paying off the smallest balance first for psychological wins. That's fine too if it keeps you motivated. The avalanche saves more money mathematically, but the snowball might work better psychologically. Choose based on what keeps you engaged and making progress. Fifth, be very careful with forbearance and deferment. These options let you pause payments temporarily during hardship, unemployment, or other qualifying situations. They can be lifesavers when you genuinely can't pay. But they're not free. Interest usually keeps accruing. Your balance grows, and you're just pushing the problem into the future. Use forbearance or deferment when you truly have no other option. But exhaust other options first: income-driven repayment, temporary payment reductions, anything that keeps you making at least some payment. Sixth, understand forgiveness programs, but don't count on them. Public Service Loan Forgiveness, PSLF, forgives remaining federal loan balance after 120 qualifying monthly payments while working full-time for a qualifying employer like government or nonprofit. It's real. It exists. But it's strict. You have to be on the right repayment plan, working for the right employer, making the right payments, and documenting everything correctly. Most people who apply for PSLF get denied because they didn't meet all the requirements. Don't assume you'll qualify. Check regularly that you're on track. Submit the employment certification form annually. Treat it like something that might work, but have a backup plan in case it doesn't. Income-driven forgiveness. After 20 or 25 years of payments on an income-driven plan, remaining balance is forgiven. But that forgiven amount may be taxed as income, creating a large tax bill. And 20 to 25 years is a long time to be in debt. Seventh, if you have private loans, your options are more limited but not zero. You can refinance to a lower interest rate if you have good credit and income. This can save money over time, but be careful. Refinancing federal loans into private loans means you lose federal protections and programs. Never refinance federal into private unless you're absolutely certain you don't need those protections. Some private lenders offer hardship programs, temporary payment reductions, or settlement options if you're in default or near it. They don't advertise this widely, but they'd rather get partial payment than nothing. If you're struggling, contact them and ask what options exist. Eighth, don't ignore your loans. Don't avoid calls or letters from servicers. Don't default if you can possibly avoid it. Default destroys your credit, triggers collection actions, wage garnishment, tax refund seizure. It makes a bad situation much worse. If you can't make payments, contact your servicer before you miss payments. Ask about income-driven plans, deferment, forbearance, any options. They'd rather keep you in some form of repayment than have you default. You have more leverage before you default than after. Ninth, be extremely skeptical of debt relief companies that promise to reduce your loans or get them forgiven for a fee. Most are scams. Everything they offer to do, you can do yourself for free by contacting your servicer. They charge hundreds or thousands of dollars to fill out forms and make phone calls you can make yourself. If you need help understanding your options, contact your loan servicer directly, or use free resources from the Department of Education, or talk to a legitimate nonprofit credit counseling agency. Don't pay companies that promise miracles. If you're still in school or thinking about college, here's what you need to know before you take on debt. These are the questions nobody makes you answer before you sign those papers. What will you realistically earn in your first job after graduation? Not the top end, not the dream scenario, the realistic median starting salary for your field. Look it up. It's public information. How much will you owe total when you graduate? Add up all the loans you'll need for all 4 or 5 or 6 years. Include interest that accrues while in school. That's your starting debt. What will your monthly payment be? Use a student loan calculator. Standard 10-year repayment on your total debt at average interest rates. What's the monthly payment? Can you afford that payment on your expected starting salary? Take your expected starting salary. Estimate after-tax monthly income. Subtract rent, utilities, food, transportation, insurance, basic living expenses. What's left? Is it more than your loan payment? If the answer is no, if the math doesn't work, you need to change something. Go to a cheaper school. Work part-time to reduce borrowing. Choose a different major with better earning potential. Take longer to graduate while working. Start at community college. The time to make these calculations is before you borrow, not after you graduate when it's too late. For parents, if your child is asking you to co-sign a loan, please understand what you're agreeing to. Co-signing makes you equally responsible for the debt. If your child can't pay, if they lose their job, if they get sick, if they decide to pursue a low-paying passion, if life happens, you owe the debt. It will affect your credit. It can be collected from you. It can follow you into retirement. Co-signing can destroy your financial security and your relationship with your child. If you have the money to help, consider giving what you can afford to give without borrowing. If you don't have the money, don't borrow it yourself. Sometimes the best gift you can give your child isn't a degree from their dream school. It's teaching them to make decisions based on math instead of emotions. Teaching them that debt is real, interest is real, and some dreams cost more than they're worth. You can't protect them from everything, but you can protect them from starting adult life drowning in debt by being honest about the costs before they commit. If you're already deep in loans and feeling hopeless, here's what you need to hear. You're not stupid. You're not lazy. You're not irresponsible. You're not alone. You made a decision based on the best information you had at the time. You were told by every authority figure you trusted that this was the right path. You believed the promise that education would lead to prosperity. That promise was oversold and the costs were understated, and you're living with the gap between what they said and what's real. The system is complicated by design. Loan servicers don't make it easy. The rules change. The options are confusing. The paperwork is overwhelming. That's not your failure. That's the system working to keep you paying without asking too many questions. But you're not powerless. Every piece of information you learn, every option you understand, every decision you make with clear eyes instead of shame, that's power. That's you taking control of something that was designed to control you. Track your loans, know your balances, your interest rates, your servicers, your repayment plans. Set up a simple spreadsheet or use a free app. Information is the first step to control. Make at least the minimum payment every month, even if it feels like it's not making a difference. Consistent payments protect your credit, prevent default, keep options open, and slowly chip away at the balance even when it doesn't feel like it. If you get a raise, a bonus, a tax refund, any unexpected money, put some toward principal, even if it's small. Every extra dollar toward principal saves you several dollars in future interest. If you find a strategy that works, if you learn something that helps, if you navigate a program successfully, share it. Comment below. Tell others, because someone else is where you were and needs to know what you learned. The student loan system is broken. Not broken by accident, broken by design. Built to transfer wealth from young people to institutions, from borrowers to lenders, from workers to asset owners. It's built to load debt onto people at the most vulnerable point in their lives. When they're young, when they're making huge life decisions without full information, when they believe the promise that education guarantees success. It's built to make that debt inescapable, permanent, immune to the normal relief valves that exist for other kinds of debt. Built to follow you for decades, to constrain your choices, to extract from you for as long as possible. That's not your failure. That's not your moral failing. That's a system that values profit over people, that treats education as a commodity instead of a public good, that sees young people as revenue sources instead of future citizens. Understanding that doesn't erase your debt. But it does erase the shame, the sense that you did something wrong. The idea that you're uniquely bad at managing this when millions of people are struggling with the exact same thing. Education should lift you up, not lock you down. Knowledge is power, but only when you're not renting it from a bank at 6% interest for 20 years. They sold you the dream of freedom, opportunity, prosperity, and the good life that comes with education. Now you're buying it back one painful monthly payment at a time. But every payment you make, every dollar toward principal, every form you fill out correctly, every program you navigate, every piece of knowledge you gain about how this system works is a step toward freedom. Not the freedom they promised, the real freedom you build by understanding the trap and finding your way through it. You're not alone. Comment your story. How long you've been paying. How much your balance has actually gone down. What you wish you'd known before you signed. What's helped you navigate it. Because someone reading this needs to know they're not the only one. That the struggle is real and shared, and not a sign of personal failure. The trap is real. But so is the community of people finding their way through it. And the more we talk about it, the more we share what works and what doesn't, the less power the system has to keep us isolated and ashamed. Here's what nobody tells you when you're signing those loan papers at 18. The degree is just the beginning. The debt is what shapes the next 20 years of your life. The degree opens doors. But the debt closes others. You can't take the unpaid internship that could lead to your dream career because you need income now. You can't move to the city with better opportunities because cost of living is too high relative to your loan payments. You can't start the business you've been planning because you can't afford the risk of unstable income. You can't go back to school for additional training because you're already drowning in education debt. Every major life decision gets filtered through the question, can I still make my loan payments? That question becomes the frame through which you see every opportunity, every relationship, every possibility. Want to get married? First question. What's their debt situation? Combined, can you afford a household? Want to have kids? How do you pay for childcare and student loans on 2 entry-level salaries? Want to buy a house? Your debt-to-income ratio doesn't qualify you for a mortgage, even though you've been paying rent that's higher than a mortgage would be. The debt doesn't just take your money, it takes your 30s. The decade when previous generations bought homes, started families, built wealth, took career risks, traveled, lived. Your 30s become about survival, about making payments, about treading water financially while watching friends without debt pull ahead. That's the real cost. Not just the dollars and the interest, the opportunity cost, the life you don't get to live because you're living the life your debt allows. And here's the generational rage that's building under the surface. The people who designed this system, who benefit from it, who tell you to just work harder and pay your loans, they didn't face this. Boomers graduated with debt that was a few $1,000s and manageable on a single income. Gen X saw costs rising, but nothing like this. Millennials were the first generation to graduate into the modern debt trap at scale. Gen Z is inheriting an even worse version. The people making policy, running universities, managing loan programs, they don't understand what it's like to graduate $75,000 in debt into an economy where entry-level jobs require 3 to 5 years of experience and pay $45,000. They don't understand what it's like to make payments faithfully for 7 years and watch your balance barely move. They don't understand the psychological weight of knowing you'll be paying this debt into your 40s or 50s. They give advice based on their experience, which is completely disconnected from your reality. I worked my way through college. Yes, when tuition was 1/10 the cost relative to wages. I paid off my loans in 5 years. Yes, when loans were 1/10 the size and wages were higher relative to cost of living. You just need to budget better. No, you need an economy where wages match costs. The math that worked for them doesn't work for you. And when you point that out, they accuse you of being entitled or lazy or unwilling to make sacrifices. They don't see that you're making sacrifices they never had to make just to stay afloat in a system that's exponentially more expensive and less forgiving than what they experienced. That disconnect between their experience and your reality, between their advice and your situation, is a source of profound frustration. Because they can't see the trap they helped build. They can't see how the policies they supported made education unaffordable. They can't see that the bootstrap narrative doesn't work when the boots cost $100,000. Comment if you've been told by someone older to just work harder and pay it off, while they have no idea what your actual numbers look like. Let's talk about what forgiveness would actually mean. Not just the policy, the human reality of it. There's constant political debate about student loan forgiveness. Should some debt be canceled? All debt? Should there be income limits? Should certain professions qualify? Is it fair to people who already paid? But underneath the policy debate is a human question. What would it mean to wake up one day without this weight? For millions of people, it would mean breathing room, the ability to save for emergencies, the ability to make choices based on what you want instead of what you owe, the ability to start businesses, have kids, buy homes, take career risks, invest in communities. It would mean economic stimulus that actually reaches people who will spend it. Young people freed from debt payments would spend on housing, on goods, on services, on starting families, on all the things that drive economic growth. Instead of money flowing to loan servicers and banks, it flows into communities and businesses. It would mean correcting a policy failure. Acknowledging that the explosion in education costs and education debt over the past 40 years was a choice, not inevitable. That loading unlimited debt onto teenagers in exchange for credentials that used to be affordable was bad policy with generational consequences. But there's fierce opposition. I paid my loans, why should they get forgiveness? It's unfair to people who didn't go to college. It's a bailout for the privileged. They chose to borrow, they should pay. These arguments ignore several things. That the people who paid their loans likely borrowed far less and earned more relative to cost of living. That people who didn't go to college are also harmed by an economy where student debt suppresses housing markets, consumer spending, and business formation. That education being unaffordable hurts everyone, not just borrowers. That choice at 18 without full information under enormous social pressure isn't quite the free choice it sounds like. And here's the thing about fairness. If your argument against helping people now is that you weren't helped in the past, you're not arguing for fairness. You're arguing for perpetuating suffering because you suffered. That's not justice. That's crabs in a bucket. Real fairness would be, I struggled with this, so I don't want others to struggle with it. I paid off my loans in different economic conditions, so I support making it easier for others in worse conditions. I benefited from affordable education in my time, so I support restoring affordability for this generation. Nobody's saying forgiveness alone fixes everything. The system that creates the debt needs to change. Costs need to come down. Funding needs to increase. Predatory lending needs to end. But forgiveness would provide immediate relief to millions, while those systemic changes happen slowly. The truth is, the student loan system is a wealth extraction machine. It takes young people at the moment they're trying to build wealth, their 20s and 30s, and ensures they spend those years paying creditors instead of building assets. Previous generations used their 20s and 30s to buy homes when they were affordable, to have kids when they were young enough to enjoy them, to take career risks because they had cushion, to save and invest and start building wealth that compounds over decades. This generation uses their 20s and 30s to service debt, to watch compound interest work against them instead of for them, to delay everything: homeownership, family formation, entrepreneurship, investment, because loans come first. By the time loans are paid off, if they ever are, you're in your 40s or 50s. You've missed the most financially powerful years of your life. You're starting wealth building at an age when previous generations were coasting on investments made decades earlier. That's not accidental. That's not personal failure. That's a system designed to extract wealth from one generation and transfer it to older generations who hold the loans, own the assets, control the capital. Student loans are how you ensure young people work for decades without building wealth. How you keep them renting instead of owning. How you keep them dependent on employment instead of financially independent. How you transfer their future earnings to creditors. It's wealth extraction disguised as opportunity. Debt disguised as investment. A trap disguised as a ladder. So what's the path forward? Not just for individuals trying to survive their debt, but for a society that's watching an entire generation crushed under obligations that previous generations never faced? We need to talk about it. Openly, honestly, without shame. The silence serves the system. When everyone suffers privately, when everyone thinks they're alone or uniquely failing, when everyone's too ashamed to admit they're drowning, nothing changes. But when millions of voices say, this isn't working, when the collective experience becomes undeniable, when the shame turns into anger and the anger turns into demand for change, that's when policy shifts. We need to demand transparency. Universities should be required to disclose actual outcomes, median earnings by major, loan default rates by program, employment rates, debt-to-income ratios. Not marketing promises. Real data. So 18-year-olds can make informed decisions instead of buying a product based on glossy brochures. We need to demand accountability. If a university raises tuition faster than inflation year after year, if a program leaves students with debt they can't service, if outcomes don't match promises, there should be consequences. Reduced federal funding. Required debt relief. Something. Right now, there's no accountability for producing graduates who can't afford their debt. We need to fix bankruptcy protections. Student loans are the only debt in America that's essentially permanent. That's not normal. That's not necessary. That's a policy choice that could be reversed. Allowing student loans to be discharged in bankruptcy after a reasonable period, say 10 years of good faith payments, would restore some balance. It would force lenders to consider ability to repay. It would give borrowers an escape valve for genuinely unpayable debt. We need to address costs. The explosion in tuition over the past 40 years is unsustainable. State funding for public universities needs to increase. Administrative bloat needs to be addressed. The amenities arms race needs to stop. Education costs need to return to reality, not 1970s reality, but some middle ground where a degree doesn't cost more than a house. We need to reconsider how we fund education. Other developed countries provide low-cost or free university education funded by taxes. They decided education is a public good that benefits society, not a private commodity you buy individually with debt. We could make different choices. Increase funding. Reduce reliance on loans. Treat education as investment in society's future instead of individual consumer purchases. But none of that happens without political will. And political will doesn't happen without public pressure. And public pressure doesn't happen when everyone's suffering in private silence. That's why talking about it matters. Why sharing your story matters. Why refusing to be ashamed matters. Not because talking fixes your individual debt, but because collective visibility creates the conditions for systemic change. Here's what I want you to take from this. Your student debt is not your moral failing. It's not proof you made bad choices or that you're financially irresponsible or that you're not working hard enough. It's proof that you believed a promise that turned out to be false. That you trusted a system that wasn't designed for your benefit. That you made decisions based on incomplete information in a context where you were pressured to borrow by every authority figure and social institution you'd ever known. The system failed you, not the other way around. Understanding that doesn't make the debt disappear, doesn't make the payments easier, doesn't give you back the opportunities the debt cost you. But it does free you from the psychological trap, the shame, the self-blame. The idea that you're uniquely bad at this when the system was designed to make it nearly impossible to win. You're navigating a broken system as best you can. You're making payments you can't really afford because you have no choice. You're sacrificing opportunities because debt doesn't give you options. You're doing what you have to do to survive in an economy that values creditor profits over your financial health. That's not weakness. That's resilience. That's you fighting your way through something that shouldn't exist in this form in the first place. If you've been paying for 5 years, 10 years, 15 years, and feeling like you'll never be free, I see you. If you've made sacrifices nobody knows about to keep up with payments, I see you. If you've stayed in jobs you hate because you need the salary to service debt, I see you. If you've delayed having kids or buying a home or starting a business because the debt won't let you, I see you. You're not alone. Millions of people are carrying this same weight. Millions of people made the same decision you did based on the same promises. Millions of people are living with the same regret, the same frustration, the same trapped feeling. That's not coincidence. That's systemic. And systemic problems require systemic solutions, not just individual hustle. So yes, do what you can individually. Understand your loans, know your options, make strategic decisions, pay what you can when you can, navigate the system as well as possible, but also recognize that you're not supposed to be able to bootstrap your way out of a systemic trap. The solution isn't just personal financial management, it's changing the system that creates the trap. Drop your story in the comments. How much do you owe? How long have you been paying? How much has your balance actually decreased? What's been hardest about it? What's helped you navigate it? What do you wish you'd known before you borrowed? Not for shame, not for comparison, but for visibility. For the collective acknowledgement that this is real and widespread and not something you suffer through alone. Because someone watching this needs to see your comment, needs to know they're not alone, needs to hear that other people understand, needs to know that feeling trapped doesn't mean they failed. It means the system succeeded in doing exactly what it was designed to do. And when enough people see that the trap is real and shared and systemic, that's when things start to change. Education should open doors. It should create possibility. It should be the foundation for building a life, not an anchor that drags you down for decades. Knowledge should empower you. Credentials should help you. Learning should make your life better, not worse. But when education comes wrapped in inescapable debt, when the credential costs more than it returns, when the system profits from keeping you paying forever, it stops being education and becomes exploitation. They sold you the dream, the promise that a degree would lead to a good job, financial stability, upward mobility, the middle-class life your parents had, the promise that education was the key to opportunity and prosperity. Now you're living with the reality. The degree that didn't guarantee anything, the debt that won't end, the payments that consume money you could be using to build the life they promised education would give you. You're buying the dream back one monthly payment at a time, and the price is higher than they said, and the timeline is longer than they implied, and the return is smaller than they promised. That's the scam, not education itself, but the system that made education unaffordable and then convinced you that borrowing whatever it costs was necessary and reasonable and worth it. You deserved better. You deserved honest information about costs and returns. You deserved education that was affordable. You deserved a system designed to help you succeed instead of profit from your struggle. You didn't get that. None of us did. But at least now you see it clearly. And seeing it clearly is the first step to surviving it, to navigating it strategically instead of blindly, to refusing to accept the blame for a systemic failure. The student loan trap is real. It's massive. It's destroying the financial futures of millions of people who did everything they were told to do. But the trap only stays locked when you don't see it, when you think it's just you, when you blame yourself, when you stay silent. The moment you see it, really see how it was built, who it benefits, Why it exists, how it functions, the trap becomes visible. And visible traps are weaker than invisible ones. You can't dismantle it alone. But you can refuse to be ashamed of being caught in it. You can share what you've learned so others navigate it better. You can demand that the system change. And when enough people do that, when enough voices say, this isn't working, loud enough that it can't be ignored, change becomes possible. Not easy, not fast, not guaranteed, but possible. They sold you the dream and made you pay for the nightmare. But you don't have to suffer through it silently, and you don't have to accept it as permanent. Because now you see it, now you understand how it works. Now you know who benefits and who pays and why the system is designed this way. And once you see the trap clearly, you can start finding your way through it. One strategic decision, one payment, one shared piece of knowledge at a time. The cycle of shame and silence breaks when enough people see clearly and speak honestly. Now you do.